Hi, welcome back to one of our another episode. So today let's dive into one of the most easiest strategy out there, one of the easiest SMC strategy out there, supply and demand. So first of all, we need to understand what supply and demand is. So in a nutshell, supply refers to a price level or area on a chart where there's abundance of sell orders for a particular asset. It's a zone where supply of an asset exceed the current demand of an asset. And same thing applies to a demand zone is a price level on a chart where there's abundance of buy orders and demand exceed supply. And if you look at it in Russia, we have different kinds of supply or demand zone. We have range created supply and demand. We have pivot created supply and demand. I'm not going to go into that. That's a topic for my trading community. So we need to understand a supply is formed due to an accumulation of orders from those that are willing to sell the asset to a specific price level. The same thing refers to a demand. But anyways, let's go into action and map out some supply and demand zone out there. So how I teach my community, I tell them that mapping out a supply or demand zone, try to follow the momentum where there's a lot of momentum. That's the next candle before a particular momentum in the market. Map that out. That is your supply or demand zone. Or you can also do like an engulfing candle. You can mark an engulfing candle. Just make things more easier, simpler for those that don't understand what I'm talking about. So if you look at this, we have here as demand zone. I'm using this candle here, this bearish candle. I'm using this bearish candle. As you can see, price tapped into it, tapped out a little bit, then busted it, and we went back to this range created demand. That is this two doji over here. I'm just going to use this one and the wick. We went down to this. So, like how I tell my student, when price gets to a specific demand or supply zone, don't just jump in and begin to buy or sell because price is in your demand or supply zone. Always wait for a follow through. Always wait for order flow to confirm that, oh, we are going into the bears are taking over or the bulls are taking over. Don't just try to buy and sell at every demand or supply zone. But in other words, every demand or supply zone, there will always be a reaction. I mean, if you go to the 1 minute, 2 minutes, 4 minutes, depending on what time frame you're using, you will always see a reaction at either a supply or a demand zone. But what you should be looking at is a follow through. Is order flow confirmed? Will this supply or demand zone hold? That should be your target. So now, as you can see here now, we have here as a demand zone that has been held. And we can see this as a supply zone that we sold from. I'm using this range created supply. You can see this as our supply zone. Again, this is the pound dollar. It's one of my, this is what I usually trade, not even one of my trading assets. It's my favorite. So now we have here as our demand zone. Now let's go to the 4 hours to see. Now we can start with the 3 hours or whatever. So now you can see that price tapped into our demand zone first time. Sorry, you can see price tapped here, pushed up, came down, tapped a little bit, pushed up again, then tapped here. Again, if I'm to take this trade, I wouldn't have taken my trade. I would have taken my entries from here. Nope, this is a no zone for me. This is a no zone. This would have been the zone I would have taken my entries from. Why? Because price really tapped into my point of interest. My point of interest is that I'm looking at the 50% discount or premium zone. So if I'm to take out my gun box to mark up this, you can see. So ultimately, I would have taken my entries from this zone. I would have taken my entries from here, and I would have scaled. I would have risked about, let me say, let's say about 20. Yeah, I would have targeted the low, and my profits would have been this high. That would have been my profit. As you can see, price tap up take profit very, very neatly. So now, since we are in our demand zone and we've bought from here, I mean, if you're using the DXY, again, it's you can use this as a reference. If you're using the DXY, that's the dollar index, to understand what this market is doing. So each time the dollar is buying, the pound is selling, and pound is each time the dollar is selling, the pound is buying. So now, if you look at this, you can depends. You can see this as a divergence. Depend if you understand what it means. But I'm not going into that. I'm just mapping out supply and demand zone. So now we are at our demand zone now. Let's see what makes price start selling from here. Surely there must be a reason for price to start selling from this zone here. And that's what we are going to map out now. Now let's go to the one. Sorry, no, the 1 hour. Now this is the 1 hour. What do we have here? We have another supply zone created inside another supply zone. I'm just going to mapping out this. Are you seeing it? Now we have another supply zone that has been created inside this. And yeah, I took this trade on Friday. This was on Friday. I got my entries from here, and I think I risked about 10. No, I risked about 8 pips. So, and my profit was my target was 16 pips. So it was a good risk to reward ratio for me, because ultimately I caught the buys. I caught these buys, and this sell was just like, okay, let me just go in and see and risk little. So now my expectation is I'm not just expecting this to come down here and start. No, no. I'm expecting at most a retracement to here. And also, if you look at this, we have buy side liquidity here that is resting above this that has not been clear. So I'm expecting something like this on Monday and down to this imbalance here. Then from there, we can know if we should continue with our bearish or bullish momentum. So if price ultimately does like this, I'm expecting something like this to continue going higher and so on and so forth. But let's just look at the supply and demand. So let's go to the 30 minutes to see. Okay, that's nice. That's nice. So if at all you missed the first entry, which is here, if you miss this entry, this first entry, you could have taken your second entry with this week. Yeah, and yeah, targeted this as your TP. So I hope you guys understand this. This is just a little video on how to trace supply and demand. But that doesn't mean you should be buying, like I said before. Don't just be buying and selling at either a supply or a demand zone. There are many catalysts for you to look out for. There are many things for you to look out for. We have liquidity that you can look out for, liquidity grab, liquidity sweep that you can look out for. So don't just start buying or selling at either a supply or a demand zone. Wait for order flow realignment. And that is something we teach in our trading community. We teach our students to always be patient, wait for order flow, wait for the market to rebalance price. Don't just react. Don't just because don't be like a trend line. I'm not trying to insult anyone. I'm not trying to insult anyone though. Don't be like because price has broken out, you should start buying. No, 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 no. Always wait for order flow. Wait for price to rebalance. Wait for a specific time before entering your trades. So I hope this video helps you a little bit. Please like and comment. Thank you.